great. Thank you so much, Rajan, for joining us today. My name is Brigitte. I'm with the Inspection Boys. We cover all of Long Island and New York City for home inspections. And today we have Rajan with Meadowbrook Financial here with us. Rajan, how are you doing today?
Oh, I am so excited to be with you today, Brigitte. Thank you first of all for inviting me to be a part of this Zoom interview, Zoom meeting. I always love to do them face to face, but hey, this is the new norm. And the more important thing is we're getting the opportunity to bring out information to people out there, and hopefully it'll be great information, great content that they find informative.
I love how you say this is becoming the new normal, because it really is. Like, this is every day I have on my calendar Zoom meeting after Zoom meeting.
Yeah, and it's funny because whether it's in meetings with my sales staff or whether it's in meetings with referral sources, whatever, it's just weird having to see them in this new environment where I'm so used to being able to shake their hands or give them a hug or just crack a joke with them, right? So but hey, you have to adapt.
What happens, like for example, one of the inspectors came into the office yesterday, and I was in the office, and they come in all geared up with their mask, their gloves, they got everything on. I'm like, oh, I guess I need to get my mask on. Like
it's still weird.
Right.
Thinking that, hey, you have to make sure you have your gloves together. You have to make sure you got your mask and your hand sanitizer. And it's one of those things like, how you remember if it's raining to walk outside with your umbrella? It's just one of those things that like every time you leave your home, you're going to have to remember that, hey, I've got to make sure I've got my gloves, my mask, my sanitizer, and, get used to it.
So true. So true. I mean, home inspections, we're wearing that, but I'm not used to it on a social level at all.
Like, right.
At all. I am not used to it. We got my husband had a friend come over to take a look to fix something in the backyard. Again, me just, I'm cooking dinner. I see him outside. Oh, hey, what's up? Come outside. Mask, everything. I'm like, oh, let me go get my mask. Like,
yeah. It's the same thing, I mean, whether we have family or friends that are passing by, it's the same thing. I mean, I'm bad at it. My wife, she's excellent. She's always like, hey, we got to be prepared. And she's always reminding me, like, even when we go outside. But yeah, for me, again, because I'm such a people person, and I like to interact with people so much, and I've obviously done it for so many years, it's just so weird now kind of remembering like, oh wait, I have to get a mask on.
So weird. But I don't know, they're saying it might go on until the end of the year. Who knows?
Well, that's the thing, right? It's developing the habit. Because I mean, here's my belief. I don't think it's just going to be even for just the end of the year. I think this is something that's just not going to go away until obviously we have vaccines. But even when you have vaccines, there are going to be adaptations of it. So I think it might just be something going forward that we're just going to have to practice.
Absolutely. So, Rajan, I wanted to ask you, you're with Meadowbrook Financial. Tell us a little bit about your history, like what it is that you do, how your background.
Absolutely. So I'm a senior vice president of sales with Meadowbrook Financial. I've been with Meadowbrook Financial now almost 6 years. Now I've been in the actual industry as a loan officer. I started back in 2003, 2002. So I kind of went way back, and I've worked my way up through the ranks. Started out at a young age trying to get into the mortgage industry. As I said, as a loan officer, and then eventually I started as a branch manager, and over time grew into the position that I'm in right now. For me personally, one of the things that I've loved throughout my career, and I've always been great at, is being able to structure files and being able to look at loans from a different perspective to see, with the knowledge of the guidelines that I have, how do you structure loans where you can get them approved? And, I think anyone that's been in the industry for, a majority or a certain length of period of time would understand that files and loans aren't easy, especially nowadays, right? There's so much that you've got to know with guidelines, and they're always changing. And so it's not an easy thing to structure loans, but to be able to be there to help the sales staff and help clients to take difficult files and structure them and getting them to get approved is incredible. I mean, listen, we hear it every day from clients that are appreciative of what we do. So for me, it's what I love. I love sales. And I'll tell you a quick funny story if you don't mind.
Of course.
So when I got into the industry, I never sold a thing in my life. Never thought about sales, never thought about the mortgage industry. And so what happened was, I had just gotten recently married, and I said, I kind of have to find something now to really earn a living. And my father was like, hey, I saw this ad for a loan officer position. Why don't you try it out? So I applied, and they had a prerequisite where you had to sit in a course for 2 weeks. And then they would do an interview after that based on, your how well you did in the 2 weeks class. And then they would decide whether they would hire you or not. Now, my first day, it was about 18 of us in a class. I said to myself, there is absolutely no way I'm getting hired. I went home to my wife. I'm like, everyone in there has some prior sales experience. They've been a realtor somewhere, maybe selling insurance, car sales, just something. And I'm like, why would they hire a guy that has no sales experience? I'm like, I don't even know where to start. But I remember I said, with anything I always did, I'm going to give it 100%. I went out, I bought a book called Mortgages for Dummies. I read it from cover to cover, and I took notes, and I always asked questions. And after the 2 weeks, it was about 5 of us that kind of had the opportunity to sit down for an interview. And my sales manager says, I don't know what it is about you, but I just want to give you a shot at it. I think this might be something that you might like it. Good at. And how it all started, I got on my first call, and the rest is history. So
that's amazing.
I always tell everyone, if I could do it, if I could be in the industry from never selling a thing in my life, I'm like, anyone could be in this industry.
Mortgage for Dummies, was that the yellow book too?
It was, exactly. Yeah, that was it. That was back in those days where everything was, something for dummies. So they had the Mortgages for Dummies.
Do you remember walking into Costco's back in the day, and they had like all the big table with all like the books and all the computer games and everything like that. As soon as you walked in, I always saw something for dummies right there.
Yes, that was me. I again, like I said, I figured, I'm like, what is the best way? Because, obviously back then computers weren't really popular. Google wasn't really popular. So you had to kind of turn to, what books had. And I was like, look, if I'm going to give this a shot, I've got to learn. And the only way I can learn or the simplest way was the Mortgages for Dummies.
That's awesome. So you've really seen the mortgage industry come from not very super technology, oriented to now all of a sudden everything's done electronically.
Well, here's the thing. I come back from the days of folder colors. So and handwritten 1003s, handwritten applications, stacks of files like this thick. So I remember, a certain color-coded folder meant what type of transaction you were doing, right? Like, let's say blue was a conventional loan, green would have been an FHA loan. So to come from those days to now where everything is basically paperless, and even more so now, like we've talked about in some of our other courses about being able to go to, mobile and having like a mobile app and everything being done electronically that way, paperlessly, it's so different. But as funny as it sounds, I kind of don't even remember what it was really like. I just remember now I'm so happy I don't have to like sit there and handwrite a full application.
That's awesome. So dinosaurs to now technology advance.
Yeah, exactly.
So that's what. So all right. So right now everybody's kind of talking about what's going to happen if there's a crash or something. You went through the 2008 crash then. So how was that?
Absolutely. So, it's funny, right? And I tell people all the time, and I kind of see the parallels. And for me, I think I've been very fortunate to be able to go through that time because I was able to learn from it. And I always talk about being able to see the lessons in everything that happens. And for me, I look back at that time, and I remember in that industry when everything started to change, everyone around me was like, that's it. It's over for the mortgage industry. We're all out of a job. We're never going to be able to write loans. We're never going to be able to be paid. We're never going to, it was like, that's it. It's doom and gloom for the mortgage industry. And I remember personally saying to myself, well, I love what I do. I've got to find a way to kind of make it through this. And so what I started doing was calling a lot of my past clients and saying, hey, I'm still here. I'm still able to help. There are some good things coming out of this because interest rates are starting to go down. And hey, I would really, really be appreciative if you can recommend any of your family or friends that might be looking into refinancing or buying. The great job that I did for you, and it would really help me out right now if you can refer them to me. And it was amazing because I just saw my business just take off. And I remember so many of my colleagues that ended up getting out of the industry and out of the business. And for me, I looked at it as this was an opportunity to capture market share. Mm-hmm. And that's exactly what happened. As I said, I was able to see my business just boom and grow through the strength of referrals. And so for me, I think it's the same thing with everything that's going on right now. I do believe that there is going to be a light at the end of the tunnel. I do believe that things will be better, but I also believe that there will be a shift in the industry where, the strong survive in a sense, and some of the weaker ones might end up kind of getting out of the industry.
And I love that you explained the both, right? Because I think right now is such a huge time for you, agents, even, everybody who has any type of business to adopt, right, to the new, to the new market of what's happening. And, it's so important. And I really appreciate that you say that because you were thinking ahead on everything that you need to do and adjusting yourself to that market. And I think that's the same thing now too. There's a lot of people.
No, I agree. I mean, I look at what we're doing right now. To me, says a lot about even with your industry and your business and what you're looking to do, right? The fact that you're seeing this as an opportunity that, hey, I can get information out there. I can promote my business. I can brand my business. People will remember that. People will remember when they come out of this in terms of whether it's agents or just individuals, right? That will need your services. They're going to remember, hey, the inspection boys, Brigitte, I remember seeing them on social media. I remember getting emails from them or text messages from them or whatever the case may be. And so when they think about a credible company or a credible individual, because they've gotten to see you over time, over these weeks or months, they're going to say, hey, I know a great company, and they're going to refer you business. So I think that's really important for people to realize that, hey, I've got two paths. I can either kind of fall into the shadows, and this is something that I said to my sales staff. I said, you've got two decisions. You can either choose to fall into the shadows and kind of sit back, see what happens, and end up where you end up. Or you can say, no, I'm going to go out there and I'm going to create future business for myself. And I'm going to, take advantage of this opportunity to get out there, put my name out there, put my brand out there, put my business out there, and build that trust from potential clients.
And that's before you mentioned market share, right? So when all this went down, I think a lot of people were thinking, what's going to happen? What do I do? I can't sell houses. I can't, people automatically thought, I can't sell houses. I can't do open houses. What am I going to do? Right. So for a little bit, you kind of saw a lot of agents kind of taking a step back, not really doing much. And then now I feel like after, some time has gone in, now you see a lot of these agents taking a big step and they're figuring out virtual houses. They're figuring out how to make these deals happen. Right? You depend on agents. We deal with agents a lot. We deal with lenders like yourself a lot. We deal with everybody that's within the transaction, lawyers too. They've had to come up with alternative ways to market because that's really what we're all doing. We're all marketing, and we've all had to figure out ways how to keep going and to take market share. It sounds kind of bad, but at the same time, that's really what we're doing.
No, I think you're absolutely right. I don't see, to be quite honest, I don't see something wrong with that because there is an opportunity, right? In every situation. And if you look back at even every economic highs and lows, there have been opportunities for companies that come out of that, right? Because there's innovation. The fact is that people look at those times and say, how do I change that so that the next time I'm ahead of it? And that's where you see a lot of development, right? I mean, look at just in a sense, technology, how that has changed from, 12 years ago with the financial collapse. Look at how we've all kind of made it through the changes in the mortgage industry, right? If we go back to 2008, 9, and 10, when guidelines just shifted so tremendously, and everyone was like, how are we going to close loans? Because it's so difficult. You know, borrowers now have to go from providing like 5 pieces of paper to now providing like 500 pieces of paper, right?
Yeah.
And so everyone was like, how are we going to ever close a loan? But, you know, we fast forward it to 10 to 12 years now, and look at the fact that, hey, look at the volume of business that's out there. Look at the record amount of sales in our industry, right? The record amount of homes that are being sold. And so it's like anything else. You adapt, you change, you figure it out. And I think that's what everyone's doing right now, whether it's attorneys or, like I said, from you guys or agents, it's about adapting. And the sad part about it is, you know, you will have some that cannot and do not have that vision and that ability to adapt. But I think that's also good for our industries, you know, each respective industry, right? Because then it kind of filters out and it kind of sifts out the good from the bad in a sense.
Yeah.
So I'm always a fan of it, to be honest.
And, you know, and you're right, within our industries too, I've already started hearing of different companies shutting their doors right now. They can't keep going, and they got to shut their doors, which is really sad to see happen. Now, one thing you mentioned that kind of, it caught my interest is you were mentioning about the 2008 financial crisis, how everything changed, right? The lenders, the requirements are from 5 pages to 500 pages, right? An example. But now in the COVID-19 market, has there been any type of changes that have been happening within your market?
So, I mean, one of the things that we tremendously are looking at is the ability to do like e-closings. You know, we have already over the years started to implement electronic signatures for disclosures. And one of the things that we've always wanted to do were e-closings. There has always been a lot of pushback about that, you know, in terms of how can you legitimately and securely have an e-closing. For me personally, I think it would be great for all of our lawmakers and everyone to really consider allowing that to happen, because then I think it will make the transaction just much easier. But from us as a company, what we have identified is the fact that, and we've looked at this, and here's the great thing. This is something that I actually identified and looked at over a year or two ago, was that there was a shift, because you also have to look at the market. And I looked at millennials a lot. And most millennials were busy working, had, you know, very busy lives, and preferred the flexibility of just doing things electronically versus having to sit down face to face. And so when I saw that shift coming in the market, I sat down with the owner of the company and they said, hey, we've got to get more to that side. So we launched, you know, a mobile app that we were able to use. We started looking at, as I said, the e-signing for documentation. So, you know, we saw that this was coming and we kind of got ahead of it, and we were fortunate. So we didn't see a drop in our business or any of that. We actually saw an increase in our business.
So and I think we are prepared for what was going to happen then.
For the most part, yes. I mean, and, you know, there were some little tweaks that we had to make, but, you know, we were all set up remotely to be able to work. I mean, our staff just rallied together. And as I said, we had record-breaking months in March, April, and May. Wow. So, I mean, to me, that says a lot.
And you know what, it's important because you were mentioning millennials, right? We deal so much with millennials. They don't want to hold pieces of paper. They want to, you know, pay you instantly, whether it's via Zelle, Venmo, PayPal, whatever the case may be. They just get it done with. So we've seen that as well as a company where the contracts are made available electronically. You know, we're home inspector, so we have to have a contract signed. So they all do it electronically. They pay electronically. They want it as seamless as possible. And you guys, you know, sounds like you guys were well prepared for that, for the COVID-19, where nobody wants to touch anything right now. You know?
Yeah, I mean, you know, the feedback that I got from the sales staff was, I mean, they were so ecstatic about that mobile app because it allowed basically people to not have to go out there and find a scanner, not have to figure out how they print out documentation, not have to figure out how they send their paperwork over to us. So it was like, hey, you're at home? Great. Download the app. Just take a picture of all the paperwork. It gets submitted directly to us. Our processors can just text you back and forth or email you for updated paperwork or whatever they need. And again, for us, I mean, the feedback even from clients were like, wow, this was amazing. This was awesome. That we didn't think that we can still close loans during this pandemic. We didn't think that we can close our refinance. I mean, we closed some refinance transactions in 8 days, wow. 9 days. I mean, so again, to be able to accomplish that goal, we had to have systems in place, and we were fortunate to be able to have that.
So when you have a buyer come to you, or even I guess before, is there anything that the bank is looking for in addition? Like, is there a change in credit scores or down payment or interest rates? How's that going right now?
Oh, so, I mean, there have been tremendous changes in our industry over the last 2 months. You know, from credit score requirements. I mean, prior to all of this, you know, you could technically have a 580 credit score. I mean, I'm speaking generally, right?
Right.
In terms of how lenders were looking at it, but you could have like a 580 credit score and be able to get a mortgage.
Wow.
You know, you were able to basically get non-QM products. And what I mean by non-QM, you know, limited documentation as far as income. You know, you were able to utilize those programs. Obviously, we all know jumbo loans and all those other things, home equity lines of credit. But I think a lot of people didn't realize the amount of risk that goes into a lot of those programs. And so what happened with all the major lenders was to say, hey, with the forbearance agreements that we're being forced into, with the fact that, you know, we don't know people's ability to have a job and be able to pay their mortgage, we've got to now look at risk very, very differently. Mm-hmm. And so they started tightening up on those guidelines. You know, some lenders actually made it a requirement that they would not lend to clients under a 700 credit score.
Wow.
Or to clients that had less than 20% equity as a down payment or less than 20% of equity in their properties. So things changed tremendously. What I am very proud of is that because we were a private bank and a private company, we were still able to offer financing. Now, again, we did also increase some of our guidelines and tighten up a little bit, but we're looking at, you know, 640 credit scores versus most other lenders that were still requiring a 700. So we fortunately were able to look at the risk factor that we had in our files and say, we know how to handle risk, and we're still able to lend at lower credit scores and have more flexibility in terms of our lending.
And what about down payments with a 640 credit score? What does down payment look like?
So on our FHAs, we could still do 3.5%.
Wow.
On our conventionals, we were still doing 3%. On our VAs, we were still doing 100% financing. So, you know, we're proud that those things didn't affect the way we lent, you know, to our borrowers.
Now, for first-time home buyers, is there still an opportunity for them to get a low interest rate and, you know, good FHA mortgage? You know, is that opportunity still there?
So here's the thing. I'll give you a feedback in terms of what I've seen over the last month, especially the last month, because I think that's important. We have seen such a tremendous spike in pre-approvals, in contract signings. And it's funny that, you know, again, we talked about this just a few minutes ago about realtors and people starting to be able to adapt, right? Mm-hmm. So you started seeing realtors figuring out ways to be able to show their properties. And we started seeing that attorneys found ways to get people to sign contracts. And so we actually seen a spike in people getting pre-approved and in our purchase transactions, also because of the fact that people were like, hey, you know, rates are at their all-time low. I mean, you know, we saw the average 30-year rate at around 3 to 3.25%.
Wow.
I mean, you know, it is unbelievable. And so people wanted to also take advantage of that opportunity and take advantage of, you know, the rates. And I mean, I think a lot of people realize that, hey, if people aren't going to be out there looking, I want to try to grab a deal up. And so I think not realizing it, but it created a demand as well. So we have seen a tremendous amount of demand in the purchase industry, in the purchase market over the last month.
So I have two questions, and I don't want to forget them both. So how is it going
Sure.
when it comes to appraisers, surveyors? Like, how is that all working? Are you guys doing that right now?
Oh, that's a great question. So in terms of appraisals, we've been very fortunate. The government, your government agencies allowed for a lot more flexibility when it came to appraisals. So for the majority of our files, we are doing external appraisals only. The only one that's really requiring an appraisal to be done is if you're doing like a cash out refinance over a certain loan to value, then they want to be able to go in there and inspect the property. But I would say for the majority of files, especially on purchases, you're able to just get away with an exterior appraisal, or depending upon your loan to value, we've seen instances where we were able to get appraisal waivers
Wow.
where you don't even need an appraisal on a file. So, again, we have navigated through this process. I mean, I even look at the files that we're closing this week and next week. A tremendous amount of our closings are purchases.
Wow.
And compared to last month when a tremendous amount of our closings were refinanced, I didn't expect such a quick shift back to the purchase market in such a short time. And again, a lot of that is because of the fact that title companies have been able to adapt. We are more flexible in terms of what our requirements are in title searches, surveys. We've been very flexible in some cases not requiring surveys. So we have really tried to adapt and create sort of a path for people to still be able to purchase homes.
Well, that's great news. And it's nice to see that along, not just you guys that have been adapting, but appraisals, everybody who is title company, everybody is adapting to try to make deals happen. Now, the other question I had for you is there a certain amount of, is there a certain amount of a loan that needs 20% down? Like, for instance, if somebody is buying a house in, I don't know, Syosset, 700,000, do the criteria for that amount of a loan change versus a house, $400,000, $300,000?
So the only way that down payments have been affected is more so when you're looking at jumbo loans,
Okay.
because there still seems to be, because again, those are your more private products. They're your more riskier products, like I mentioned before, like your non-QMs. So like, for instance, jumbo loans and jumbo products, we've seen an increase in your down payment to still be able to get a jumbo loan. Again, the reason why is those are outside the scope of the GSEs, right? So when we talk about GSEs, we're talking about your Fannie products, you're talking about your Freddie Mac products, you're talking about your FHA, HUD products. Those are all government agencies, right? So those have been protected by the government. Outside of that, you have private lending. That has really tightened up because, as I said, banks are scared. They don't want to close deals and have those sit on their books and not perform because people are out of a job or cannot afford to pay it, right? So they don't want to increase the amount of forbearance loans that they have on their books. And that's understandable. So I do believe at some point we are going to, and we are seeing it in small batches, I do believe that there's going to be a return to normal, very soon, because we're starting to now navigate through those waters and mitigate risk and see what that risk is and how to handle it. But in terms of, one product over a next, it's really only been in the jumbo products that we've seen an increased amount of down payments. So the good news is if you're still a first-time home buyer, you can still put, as I mentioned, 3% down on conventional products, 3.5% down on FHA products, 100% or no money down on VA products. So I think it's still a great time to go out there and buy a property because of where interest rates are.
I think that's so important for people to know that that's still available because we live in New York City, Long Island area. Like, houses are so expensive. And for somebody, even if they're buying, a $500,000 house, that down payment, if it had to be at the 20%, that's a huge down payment. Most people don't have that, So from what advice would you give to first-time home buyers that are trying to get into, purchasing their first home? Like, what advice would you give for them right now?
So this is something that I've spoken to my sales staff about, even, on a personal basis with people that I know that were questioning whether they should buy now or wait. And for me, I have always been a person that looks at interest rates, right? Because here's the thing: if a property drops, you know, $10,000 or $15,000 in price, or even 20,000, but interest rates go up, you know, 1% or more, you know, you're paying that higher percentage over that 30 years. You're actually paying more money than that drop of $10,000 or $15,000 in price. So when I look at the fact that, hey, you can be a first-time home buyer getting a 3% interest rate or a 3.25% interest rate, for me, it's like, if I was a first-time home buyer, I would be running out there trying to buy. I mean, within a certain way, you know, if you know that you have a strong foundational job, right? Like if you're a government employee, or, you know, again, there are other things like if you're a healthcare worker. I mean, there's strong industries that jobs are secure. So if you know your job is secure, and you're renting and you wanted to buy, I would tell you, go out there, run out there, buy right now, because these are great opportunities. And it's funny because I think back about the conversations that I had with clients back in 2009 and 10, and people were like, should I be buying? You know, is this whole economy going to collapse? And, you know, should I wait to buy? And I said to them, you know, back then it was, you're getting 30, 40% drops in prices on homes. And you had interest rates at that time still in like the 4.5% range. And I said, look, you know, you might never see an opportunity like this where you've seen such a drop in prices and a drop in interest rates. You should run out and buy. And I feel like this is that time again where people need to take advantage of those rates.
That's so true. So true. So if you had to give agents or anybody any type of marketing advice right now, because you're an excellent marketer. Like, I see your stuff on social media. You do a really good job, and you have a strong presence. You do a really good job. So if you had to give anybody, you know, advice right now, what would be your advice to them?
So here's my thing. I mean, at the end of the day, it's the easiest way to put yourself out there, right? I mean, we're all not comfortable being in the spotlight. We're all not comfortable having people look at us. We all find flaws in ourselves. But I think at the end of the day, you've got to realize that, look, I guess for me, I look at it this way. It's my business, right? And I am either going to put every single thing I have into the success of this business, or I'm either going to let it die. And for me, I would rather give it, you know, every single thing I have, and know that if it does even fail, that at least I gave it everything, right? But you can't say that my business is failing, or I'm not getting business, or I'm not getting transactions, but you haven't tried anything, right? So when I look at social media, I think it is such an easy way for you to market yourself, because we all have followers, right? Which means we've all got friends and family members and colleagues that are out there that we can market to and say, hey, I'm still a realtor. I still want to help your clients. I still want to help people that are thinking about buying. And don't forget that I'm in the industry. And it doesn't cost you anything. Or if you want to spend a little bit of money, you can take that video and market it to many other people in many other areas, right? But the way I look at it is, there's so many cost-effective or cost-free ways to still get business. You can still email people. You can still text, you can still do videos, you can still let people know that you're out there. And here's the thing that I've seen over the last 2 months. I've seen a lot of realtors that have taken up that challenge and have said, hey, I'm going to do things that I'm not normally comfortable with. I mean, you know, in terms of doing videos, and I'm going to just, you know, go out there and put it out there. And I've seen that, and I've seen other people that kind of retreated into the background. But again, as I said, if we're still seeing business and we're still seeing people buying homes, that means that there are realtors that are out there doing something. And so my advice, again, to realtors or to just anyone that is out there, now is that time to get comfortable or get out of that comfort zone that you're in and get comfortable with being out there on social media. Take advantage of it, send videos out, send emails out, send text messages out, but do what you've got to do for your business. Remember, give it your all.
It's so true. Using the technology that's available to us and cheap. It's cheap marketing use it to your benefit. I love that. Well, Rajan, if you don't have anything else to say, I thank you so much. You gave so much information. I actually have a page of like 20 more questions to ask you, but I'm going to bore you. But
I love it.
You taught me a lot, and I love your background. Like, you've already gone through a huge crisis in your experience. COVID-19 is a totally new thing for everybody, you know, totally new thing. And we're all just doing the best that we can to adapt. I think adaptation is huge, and using the new marketing tools that's available to us as well, because not for nothing, you have to market, we have to market, everybody has to market, because we all have a client that we want to serve, right? We want that client to come reach out to us. So, you know, right now adaptation is so key, and I just love your background, and you're just so knowledgeable. So thank you so much. I really appreciate it.
And I appreciate you bringing me onto this platform, you know, and I just want to say, and it's not honestly because you're bringing me onto it, but it's really what I've seen over these past couple of weeks. You know, I love the fact that you yourself have taken up that challenge, and, you know, you've done videos, you've done CE courses, you've done just everything that you can to, you know, kind of take your business through this, right? And I applaud that all day long, because as I said, it's not easy. There's no, like, you know, guideline of how to kind of get your business through all of this. But you know what you've done? You've taken initiative, right? You've not allowed your business to kind of just sit there and, you know, possibly even close down. You said, hey, look, I see this as an opportunity. I'm going to do what I think is the best thing for my company, and I'm going to put it out there and do everything that I can for people to know that, hey, when they need an inspection, they're going to go to the inspection boys. I can tell you for myself personally, and for my sales staff, I've told them, I said, hey, this is our go-to company. If people ask us for recommendations, this is the company we want to recommend. Because for me, the way I look at it is, if you're going to put this much into your personal business to care about the growth of it, and, you know, to kind of make it through this pandemic, then I know you're going to give our clients 110%. And that's what I want in anyone that I would have as a referral partner or a business partner, or just anyone working with our clients.
I really appreciate that, Rajan. That's, you know, that means a lot. And to have, you know, as a referral partner would be incredible. So I really appreciate that. And guys, look out. We've all been with Rajan as well, and a few other people. We've been partnering for free CE courses for agents. So get in contact with us. Get those CE credits now while you have the time to be sitting at home.
And it's free.
It's free. What's the saying? If it's free, give me 3.
Yes, there you go. Exactly.
So thank you guys again so much for joining us, and everybody at home, please like or share this video.
Yes, thank you again, Brigitte. Take care.
Thank you.